Um, I'm sure you guys can hear me now. Hello. I think I'll have to check it for myself. Hello. So my voice is kind of very low, but I'm very sure it should be clear right now. Yeah, I'm very sure my voice should be clear right now. Okay. Desktop. Okay. Yeah. So all this. Okay. I think I'll have to use my external mic. Desktop. Yeah, so all this. Okay. Okay. Um. Okay. Okay. I can see you guys chat. Yeah, and I'm very sure that my voice should be very clear right now. I'm trying to make sure that there's a little bit of on the ground, check before we proceed. Okay. Uh, um. Okay. Okay. So it's normal. So just flow. Let's just flow with the vibe, because at the end of the day, I'm trying to make sure that you know we go home with something in our trading account, okay, in our profits. I mean, we've had something, we've had profits to our margin. That's what I'm trying to say. Now, clearly, if I'm asking you that, I think I'm on gold, I'm actually on this sell and I've placed my limit order. It's actually a stop order, and I placed it here. Where's that now? That's I'm looking for that short position stop. Yeah, I've placed a stop order here, and then this is my stop loss level there. So I just have to zoom in that thing so that you can see. And then I'm hoping for price clearing this low here. You understand? Yeah, price clearing that low there. And I think that should up be about one ratio. That's 1:2 thereabout. Yeah. So that's my first entry for that's the first trade I'll be taking today. Okay. So I think for the sake of making sure that you guys can see what I'm doing, so I'll just zoom in. No, no, that's too much. Okay. So this is gold, and I don't even want to start with gold. I'm just showing you guys that as a starter. So let's go down to my favorite pair, which is AUD USD, and then I'll be going to the 15 minutes to explain what's happening today, or what has happened, and how we what we could be expecting actually, because um, hold on, I'm trying to do something here. Okay. Okay, so this is AUD USD chart, and I'm just going to remove all these lipsticks on my chart, and I'm going to leave this demarcation line, which is the daily divider, and you all know that. Now, I want you to know something, and that is the fact that I know majority of you would be like, when you come to the chart, you should have already framed what you are expecting. A very good example is inversion, or let me not even use inversion, let me use the previous levels. For example, you see this level that I put, this stuff that is here, this is the previous um session low. And why am I paying attention to previous session low, which is Asian session low? Is because previous day low had been cleared. Another previous day low was cleared here. Another previous day low was actually cleared here. So it makes sense for me to start anticipating a reversal in price. Although I don't know when it will happen, but with this kind of move, we are not wrong to anticipate a kind of massive pullback of a sort before continuation, if there's going to be a continuation. You understand? But then that is just what I think. That is what I am expecting. Like, when you want something to happen, something that you are framing the possibility of it happening in the future. Okay, so it's more like saying, let's put this in mind and let's keep it to one side. Now, after we have done that, we still have to work with what is happening in the current, what is happening right now in the moment. That is our own concern. Yes, we can have our expectation, but what is happening right now is more than whatever expectation we are having, and that's how you make money in this market. See, market the is as simple as coming to the market and looking for just one single thing, and then you are good. Now, let me expose you guys to something, and let me say I'm going to switch back to, okay, this Sunday, yeah, this Monday, and okay, let me go back to last week. So I want to show you guys something. I want to show you guys something. Yeah, I think yeah. So this is Monday, this is Tuesday, Wednesday, Thursday, and Friday. And then you see these shaded levels. You see this ash area. This ash area is London session. This area that is not hash, this free, this yellow area, that is Asian session. And then this blue or green area or gray area, as you would see it from your end, that is my New York session. And I'm trading Australian dollar USD. Now, because of I'm trading AUD USD, I'll be looking for my entry where Asian session or New York session. That's when I'm looking for my massive price delivery. Now, sometimes price would move in London, but whenever you see price move in London, it would most likely not be a reversal. It will most likely be a continuation of Asian session or just consolidation. A very good example is, look at this Asian open on Monday. You see it was bullish, and then what happened in London? You see London was bullish also. Look at Asian session on Tuesday. Now look at that. Even though price delivered in Asian session on look at that. Now price delivered in this New York session. I'm sorry, London session, but it came into where? Into this inversion before it delivered. So it's literally a continuation of what? Of that Asian move. Look at this. Look at all the consolidation, and then in New York it moved. So as an AUD USD trader, I'm looking for my price delivery, Asian or New York, and I think I've spoken so much about it in the free lecture I gave you guys. Now, because me now, I'm not somebody who is usually very awake during Asian session, so I don't trade Asian session. I only look for my entry on New York session. Okay, only New York session. Now, what if I trade Asian session? Now, this is how it's going to be. Um, this is how it's going to be. This is okay. I think this is Monday here, Tuesday, Wednesday, Thursday, and Friday. Okay, this Friday. Yeah, yeah, good. So Monday, Tuesday, Wednesday, Thursday, and Friday. Now, do you know that I already know the amount I'm going to lose this week alone? Yes, I can tell you that every week I already know the amount I'm going to lose. Like the moment I'm exhausted for the week, and the interesting part is that I don't get exhausted until Friday. That's the thing about me. I know how much I'm willing to lose in a month, in a year, I'm sorry, in a week. And the funny thing is that I will not lose. That is if I'm losing every day, oh, and I'm losing every time. Like I'm having continuous winning streak. I will not lose more than that amount until market close on Friday. And what is the trick? Now, this is one of the things I teach those in my mentorship, and this is something you should pay attention to. Let's say, for example, you have $1,000, $1,000. Yeah, $1,000. That's approximately, yeah. What's this guy showing now? Okay, text. Yeah. So let's say you have one $1,000. Now you see this $1,000 is all you have on your brokerage account. Okay. Now you would have to determine by yourself how much you're willing to risk out of that $1,000 for the whole of that week. Oh, okay. You can also have a monthly, budget, but we are trying to budget our money here. Okay, that's what we are trying to do. We are budgeting. Okay, so you can have monthly budgets, but I'm focusing on weekly here. Okay, so let's say for this week, all I'm willing to lose is $100, or for every week, out of my $10,000, I don't want to lose what? Out of my $1,000, I don't want to lose more than $100. And I want to trade every day of the week. Now, this is how it's being done. Hmm? Now, $100 is just 10% of 1,000 USD. Okay. Now, when you have an edge as a trader, and it's very important that you have an edge. When you have an edge, you cannot blow your 100,000, your 1,000 USD. It's not possible. If you follow what I'm about to explain to you. Okay. So the condition is that you have an edge. Okay. And the market business model is an edge in itself. Okay. Now let's proceed. Now, if I'm willing to risk 100 USD, that's the amount I'm willing to lose. So I'm just going to, in my brain, I'm just going to minus 100 USD. You see that? So I've already minus 100 USD like that. So I assume that what I'm left with is 900. You understand? So minus 100 USD. That's the amount you're gonna put quickly there. Okay, so pay attention to what I'm typing here. Now, if how many session, now this is how I ask myself the questions. Okay, this is how I make my trading decision. How many sessions do I trade in a week? Now, in a day, I trade only two sessions. The first session is the session of the base currency, and the second session is the session of the quote currency. Okay, that is for those of you who are trading, let's say EU, GU, and other AU currency pairs. Okay, the first session is the base currency session. In this example, AUD USD. So I'm looking for my entry Asian session. And then the second session is what? New York session. I'm skipping London. Now, if this is the two sessions I trade in a day, that means I only take two losses every day. I can only take how many losses now? Two losses every day. Only two. Why? One loss in Asian and one loss in New York. Just two losses. Now, if I now do the multiplication of the amount of losses I would most probably make in a week, Monday two sessions, Tuesday two sessions, that's what, four. Wednesday plus two, that's what, six. Thursday two again, that's eight. And Friday two again, that's what, 10. Now, I deliberately, I told us you don't trade on Mondays. You only trade Tuesday, Wednesday, Thursdays, and Friday if you wish. But see, Tuesday, Wednesday, Thursday, that's when you make the most money in this market. But let's now assume that we are trading the Monday, Tuesday, Wednesday, Thursday, Friday. The highest you're going to lose is 10 losing streaks. Now, if I'm going to experience 10 losing streaks, 10 losing streaks, losing streaks. Now, if I'm going to be experiencing 10 losing streaks, and I'm now do, you see this amount of 10 that I'm losing, the 10 losing streaks I'll be experiencing, it means that every time I lose in a session, I am losing a certain amount out of my 100 USD. But at the end of the day, it must not exceed what? 1000 USD, because that's the amount I'm willing to lose weekly. So if I'm losing 100 USD in Monday, New York, Monday, London, I'm not trading for the rest of the week. If I'm losing 100 USD for Tuesday, New York, till next week. But that's very stupid, Abby. It's more like putting all your eggs in one basket, because if you go and blow your weekly allocation on Monday, what if opportunity shows on Wednesday or Thursday or even Friday or even the next session of that same day? That's stupid. So what you want to do is you now create opportunity for yourself. How do I create opportunity for myself? The first thing I do is I spread my losses. My losses now become, they become assets. I used to call it IOU. Yes, it's as if I borrow the market, and every session I am planning to take it back from the market or lose it. So what do I do? You see this $100, I now spread it. How many sessions am I trading in a week? 10, 10, I'm sorry, two sessions, but but 5 times. Abi, that is 2 times 5. 2 sessions per day, 5 days in a week. That's 2 times 5 now. That's 10 bar. So 10 trades in a day, in a week, in 10 in 2 sessions each. So at the end of the day, all the trades I'm taking in a week is how many? 10 trades. 10 trades. It's giving that 10 trade distance. But anyway, now I will now say, okay, how can I spread this 100 USD, this amount that I'm not willing to, this amount that I'm willing to risk for this month, for this week? How can I spread it among my 10 trades? That's when the division now comes in. Then I divide the 10 by 100. And do you know how much it will now tell me to risk per trade? Just 10 USD. Just 10 USD. So it is telling me that every session that I want to trade, anything that is more than 10 USD, I wash my hands off it. Yes. And do you know that sometimes you would be expecting entry where in, it's not every session that is going to give you entry. Yes, it's not every session. So sometimes when you do not get your entry, that is addition on the next session. Okay, so you don't just follow like a computer and say, oh, because Chatterman said 10 USD per this thing, you force trades. You don't force trades. Sometimes I don't see trades in a whole day. That means the $20 for that day is saved. The next day now I can now increase my risk a little bit. Why? Because because yesterday loss had been averted. It's a simple way to grow your equity. These are the simple secrets on how may I do my thing. And whenever we start, doing our live stream, sometimes you would see me do some of these things. So don't be surprised. I'm deliberately saying this so that you can get yourself acquainted with it, and you might probably want to adopt some of this style. So long story short, what I'm trying to say in essence is that I will now divide 10 by what? 10 by 100. And then it's telling me that the amount I can risk per session, per trade, is just 10 USD. So any time I'm looking for a long position or a short position, and I'm counting my pips in stop loss, I make sure that it does not exceed $10 loss or something around. Of course, it doesn't have to be 10 on point. It could be maybe 10.9, 11, or 9 or 8 or something like thereabout. But it shouldn't be too much. You understand? That's what I'm trying to say. Now, when you have settled this, when you are settled, the whole amount you're about to you would lose, most probably lose in a week and all the likes, then you have become untouchable. The next thing you need to do is wake up. Is inversion forming? Yes, enter buy. Wake up, previous day low cleared, yes, enter buy. Previous day high cleared, yes, enter buy. In fact, you would most probably not even be scared of any news. Why? Because you know how much you are willing to risk. You know. So you can literally say with boldness and confidence that this week I already know how my week is going to end. Now, this is the interesting part when I was saying you must have an edge. Now, what makes your losing streak sensible is the profit margin per loss. What I'm trying to say is that if you are willing to risk $10 on a trade, let me use a very good example. Long position. If you are willing to risk, you see, this is a trade now, if you are willing to risk $10, the profit you should be gaining should be of, you know, I mean, it should compensate you enough for your loss. What I'm trying to say is, if you are losing $100 and $10, your profit should be about minimum three, that sorry, $30. Yes, $30 minimum, minimum $30. So when you see a trade setup that is not giving you that potential of that, profit margin that you anticipated, you might want to leave it alone. That's bad market. I call them bad market. I don't do them because I might most probably even be buying at an extreme end and I won't know. So minimum 1:3. Now, thank God, the market business model, for those of you who are trading it, you would have seen that at least the market business model gives you a minimum of 5, 1:5. If you can refine it very well, you can even get as high as 1:20 plus. Yes, this is an inversion model entry here. It just I was not in this trade, but let's look at a scenario. That's a short setup here. What is this? This is an inversion. You see that high there? Let me zoom that in for us. You see? Sorry, let me. Now that's our stop loss bar, the origin. You see that high there? That's our origin. This is our prime. And this is the climax. But price never cleared the climax until when? Until CPI. And look at what CPI delivered to us. Look at that. Let's even imagine that you're closing at this candle close here. If I'm going to zoom that in for us, you're going to see that this is about. I'm coming. Let me show that. That's 1:27. That is like that is like I mean enough weeks losses already covered. This one just risking $10, you are making 270K. Yeah, because if it's 27, that's 270K, $270 rather. So you're risking $10, you're making $270. Why? Because you refined very well. And CPI delivered to you. And we have not even talked about the fact that if we are to eat the whole of this move, let's imagine that we are eating the whole of this move since that CPI, you will be in bastard profit right now. And I think that should be 1:50 something. Yeah. Using 10 and you are getting $50. See, if you study the market business model very well, you stop having unnecessary losses. And that is the thing. It gives you It gives, I think one of the things I used to advise these guys is this overconfidence. It gives you this confidence. You just know that you will be right. You might be wrong eventually, oh, but you just know that you know what you're doing. You grab. So um yeah, so gold just activated our trade. Yeah, the entry I gave us, gold just activated that sell, and hopefully we'll close in profit. So let's get down to our risk management. Sorry, trade management and risk management, everything all together. Now that I already know the amount I'm willing to risk every month, every week, and how I should be looking at it, and then I already know that okay, I should be anticipating one ratio so so and so, one ratio so so and so. Now the next thing is now to sort yourself. What am I looking for? Based on what I teach you guys, you are looking for either level closes, you know, price action at certain level, or inversions. And remember, inversions are only for continuation. Okay, so um, the reason why you see price continuing like this is because of the inversion models playing out and low and low. I was actually anticipating AU coming to this region here before dropping, but I don't think he had any plan to. It has any plan to do that. It has any plan to do that one. So you know what you're looking for, so that by the time you now come to the chart, you stop gallivanting. You stop, oh, explanation. Nobody's buying those explanations. Nobody cares about those explanations. They come to the market, make money, go and sleep. Within 30 minutes, you're done with what you're looking. 30 minutes is even too long for a pro. But at least for a beginner, within 30 minutes, you already know what you're looking for. If you are wrong, you are wrong. If you are right, you smile home. Now, you see this line here. You see this line here. Let me go and show you where it is. Now, I want to give us my trade bias. Now, let me go to the 4 hour. If you go to the 4 hour, I taught you guys something called prime bar. Yeah, I taught you guys prime. So if we go to yeah, you see this level here. So let's go to 4 hour time frame. Yeah, you see that this is a prime. This is a prime level here. So if I'm going to refine that prime, I'm gonna put it here. So I'm still expecting AUD USD to what? To sell to that prime. Now you might be wondering, what are these dotted lines on my screen? Don't worry about it. You always come and you meet it there. Okay. Now, so I'm anticipating AU still dropping to this level. Okay. So what I'm going to do now is I'm just looking for what? Inversion. If price had been falling, so I'm expecting what? Continuation of price delivery. So what am I looking for? Inversion. End of story. No need for long talk. So what I'm looking for is the most probable inversion that I could trade. And as you can see, price had clearly created one for us here. So what I'm going to do is I'll just go to maybe the 15 minutes for refined entry, or 5 minutes. Let me go to 5 minutes for that refined entry. And okay, I think I can still go down. Yeah, and then see it here. That's my refined entry here. If I'm wrong, I'm wrong. If I'm right, I'm right. You see that? Because this is the lowest high. I'm sorry, the lowest low. This is the prime, a low. This is the lowest prime here. So I'm gonna put, where is it now? Where's my short position? I'm gonna put my short position. I'm very sure if I go to 1 minute time frame, let's go to 1 minute. Let's see if we can see. Okay, I think yeah, it's the same thing on the 1 minute time frame, except if you want to do over Sabi. But I think it's okay. This is enough. How many pips loss from origin to prime? 4.5 pips. Yeah. So and I think that's relatively okay. Now you might, keep on refining and refining. Trust me, MBM will give you, it will deliver. Even if you refine to 1 second, look, for example, look at this. Is this not a prime here? This is a low. I'm sorry, this is a low, this is a high, and a price delivered. And then if you draw it, this is where you should be entering. Abi? So traditionally, this is where you should be entering. But if you snipe, if you want those snipe entry, look at that. You see that, because that's the low. That's another low here. And then this is, you see these levels here. This is another low. This is another low. And you see how price came into that level and then it delivered to you. And then it delivered. So, but then the chances of those things activating are very, very low. The more you refine, the more you are more likely to miss the trade. Understand? And personally, I prefer taking stop loss than missing a trade, though. I don't know about you people, but that's just me. I prefer taking that stop loss than missing the trade. But if you're a beginner, please let it be opposite for you. Okay. Now let's proceed. So I'm anticipating price, delivering to that level. Oh, I think they just carried the light now. My inverter. Just please hold on. Okay. Yeah. So let's proceed. So I'm gonna put my short position there now. And yeah, my stop loss is going to be, I'm just going to give it a little breathing space. And now I'll go to my main. You remember, I came to lower time frame to just look for refined entry. That was not, I didn't pick my zone from the lower time frame. I picked it from higher time frame, and I already have where an anticipate price delivering to. Okay. So if we look at it, um, I think I need to zoom in. Yeah, if we look at it very well, you see that this is at least 1:7.8, and that's what I'm anticipating price to do. Okay, so what I'm looking for is something like this. I don't know where how it's gonna do it, but you know, come into that and then deliver into our prime, and then you might decide to do whatever I want to do after that. Okay, so you might want to place that. This is going to be a limit order, so you might want to enter that. Because we started late, so we are actually not in this move. Okay, but tomorrow definitely will start very early. I'm going to set a um, I had one or two hiccup while trying to set up. Okay, so let's go to Euro USD. This is Euro USD. Okay, so this is Euro USD, and we are not looking for any long story or long talk. What we are doing is simple: rinse and repeat. You understand? So this is London. London had given us a bullish momentum, but I'm not buying this. Do you know why? Do you know why I won't be looking for a continuation? Is because the only condition for me to sell would be, sorry, for a reversal have not been met. Yes, it has cleared some certain level and all, but let me go to the 4 hour time frame. Yeah, you see this level here, this level that I marked here, and this is why I don't like putting all this daily stuff on my. It's because of I'm teaching you guys. That's why I'm putting all these things. Now, normally I don't use them. I'm just putting them for annotation. Yeah, good. So this is another prime here. You see that this prime here. Actually, this is one here. Okay, and this is another one here. But I will most like I would want it to come to this one. Why? Why am I expecting it to for it to come to this one? You see, this particular prime is the one that cleared. Look at that clearing. Cleared all this low here. Did some clearing and then it delivered. So these levels here might be cleared and then price come down here. So I'm not buying that move that AU is doing. Moreover, if we look at it very well on the higher time frame, we can see this is a prime, this is an origin, and this is a climax. Okay. The only thing that will invalidate us looking for sell is if price is going to clear that high there. You see this high? Yeah. Apart from price, and if price is going to clear this high, then that means that we can start looking for buy momentum up to this region here. You understand? So if it clears this high, what we're looking for is a pullback and then continuation to clear that high to to this prime level here. So I'm just going to go to 1 hour time frame. I'm going to keep on looking for my entry. And naturally, I would have anticipated price, reversing at this point, but I think it created something I called flip zoning, the market business model here. So what I'm looking for is my BBIS, and that's what it is giving me here. Very simple. See that? Cleared this high. Now, I would have wanted to clear previous day high, which is, where's it now? Yeah, this high, previous day high, but I don't think it's going to do that. And even if it's gonna do that, I'm willing to take that risk. You understand? So I'm looking for my short position as a buy stop order, and I'll place it here. See that BBIS created, and I'll put my stop loss where at that high, and then where is price delivering to that low. You understand? Now I'm gonna give it a little breathing space. Yeah, and that is 1:2.7. Now, you remember I told you, oh, if it's not 1:3, you shouldn't enter and all those kind of things. But there should be some exemptions. Like for example, this one now, we know it is delivering to a prime. You understand? And this is a continuation, not really a reversal. So we just open that EU delivers, okay? Which one is there again? NU, yeah, NU is already moving. This is our BBIS here, but it's already activated it. And I'm not this kind of person that likes to chase after price. So I'm okay with whatever it's doing. Initially, I was anticipating NU going into this prime here and even refined it up to that level there. Yeah, you see that level there, but it's not coming, it's not going there. So I can't force it. It's the market. So I'm not doing anything on NU. GUO, you can take an entry market order here right now. So I'm placing my own entry now. Yeah, because this is a BBIS. This is a BBIS. Now, I might be wrong, okay? Because what I'm looking for GU is that if I'm going to enter GU, I would want it to clear this low. You see this low? Once it clears this low, what will happen? You see this level here will now become an inversion. Exactly. So if you can clear this low, clears this low, impulsively clear this low or not, you see this level now becomes what? An inversion. So I'm looking at a limit order there. So conservatively, that's what I'm going to be doing. But if you're an aggressive trader, you might just enter here direct and you'll be lucky because price might even come here, break this low, and might not even reverse. You understand? That's what. So for me, on okay, let me try to go to 5 minute time frame right now. Okay, I think I'm more confident if it's gonna come down to break that level. Yeah, I'm going to wait. Okay, So you might also join me to wait, or you might place an entry here, depending on the kind of trader that you are. So at the end of the day, what we are hoping is that it's gonna deliver to clear this low. Okay, you see that low there. Now I'm gonna check. I think I saw a prime on the 4 hour. I'm not sure, but let's check that. Yeah, look at this whole imbalance level here. These are prime levels. So we might anticipate GU dropping to that zones. And this is also another prime level here. Okay, so it could reverse from here. So that's the reason why I'm saying for GU, I'm just going to be trading conservatively for now. Okay, conservatively. I'm just going to, let's say I'm going to want to have more, more confirmation of what I'm seeing. Okay, more confirmation of what I'm saying. And what I'm saying here is let it break this low, and then I'm going to enter. Okay, so that's my short position. After price breaks this low, I'm looking for a short position all the way to clear that low there. And that's 1 ratio 2.3 also. No, that's 1 ratio 2.7 also. So what I'm looking at is price clearing this low, going back up, what you people will call typical support and support and retest, whatever, being a break and retest, but it's not break and retest. Okay, we are having more confluence to why price is delivering a certain way. Okay, so you can see it's already dropping. So if you're aggressive, like I said, you can enter. If you are conservative, just wait for it to break this level reverse. You enter at that reversal, and then you are good to go. So let's check what else. Yeah, G. So gold. As for gold, I think I made that call when we started that I'm entering at this point here. Yeah, so it's a stop order, self stop.